Hello. So yeah, guys, this is my first YouTube video, and let's get started right now. So we'll now look for the weekly analysis of this week, and this was a very awesome week. And let's get some music on first. Yeah. So let's get started this week. What happened this week and कैसे कैसे मार्केट ने पेंट किया अपना पिक्चर. So let's start with gold. So gold right now, if we look at daily time frame, let's go to daily time frame. So Monday. So this week started around here, right? Let's give a vertical line. Yeah. So on Monday there was a bullish move because here, if you look at this fair value gap, it was resisting for this previous week, but it was not going down because this was being respected. This fair value gap on a daily basis was getting respected. Give me a minute. Yeah, got it. Okay, so this fair value gap has been rejected. Monday, if you look at Friday, then Monday and Tuesday, it was being paused on Friday, but it came eventually. Then it started on Wednesday, it started going up again and created another fair value gap, which is like here. If we see this fair value gap written on Monday, so let's go to 4 hour time frame. So what we can see is this is the initial consolidation, like from, if we take from Monday to around a week, this was this consolidation. So this consolidation remained for the week. Okay, so if you look at Monday, let's go to Ali. So in the New York session, let's go to Monday New York session. Okay, yeah, let's go and watch what happened on Monday session. If you look at 15 minutes, or let's go to Ali. Ali is good. So a vertical line, there is a vertical line. Oh, gone. Let's find Monday, midnight open and market. So this is midnight open Monday. So here what we see is market started going up on Monday, and at around New York session, if we go to 15 minutes or 5 minutes per se, on Monday, we will look at New York session, what it did. Like on the London session and London first session, London second session, market created these pools of liquidity to the outside, like these. Okay, then what market did is made a consolidation and made a move. by sweeping this internal liquidity. Okay, after that move, market came down, and if we focus on the both the macros, neo game 1 and neo game 2, so what we see is a straight fall, and when the market took this liquidity, then it went up, then down. So no major move on Monday, no setups on Monday for me at least. Let's go to Tuesday. So if we look at Tuesday, we mark the midnight opener. Yeah, so it is Tuesday. What Tuesday did is like market started. Look at early on Tuesday. Let's go. If you look at early on Tuesday, market started building the same. If it would have gone up, then it would have created a fair value gap here, right? Big expansion candle. But if you look at it, is a small fair value gap, and after that, when this was purged, then no move came upwards, right? So if you go to 15 minutes and go to Tuesday, so right, so what market did, swept the London highs. Then if you want a setup, this is our beautiful setup being presented, the first presented fair value gap in the New York session, and the target should be this low, New York last hour low, and it was a good 1:3 trade. So if we go to Wednesday, midnight open, let's go to Wednesday midnight open. So yeah guys, this is my first live stream, so I don't know how I'm doing. So please share your valuable thoughts if you can. And if we go to Wednesday per se, so this is nothing, simple buying in London session 1, London session 2, then the explosive move came on New York session 1, where it swept kind of, if we go to 5 minutes on Wednesday. So here you can see market kind of swept the internal liquidity, then move upwards, then didn't break this low. If you look at, wait a sec, if you look at this low, okay, if you look at this low, this was not, sorry, mistake. Yeah, so if we look at this low, okay, this low was not taken, this low was not taken, so the buyers were here in this range, so the sellers can't move the market beyond this low, this level. So what they did is they made a bearish move, then flipped it upwards with a fair value gap. So in this scenario, we can see there is a lot of buying pressure. So when there is a lot of buying pressure, what happens is market moves and breaks this structure to the upside. Okay, this structure to the upside, and then what it does is it retraces back. But if you look at this move, it completely comes back to this. So there is not a possibility of a trade, and then it moves tremendously without even giving a entry. Possible entry for this might be here, where you can target just 1 is to 2 because it's a risky trade and market haven't taken the liquidity which we wanted. So you can just target a 1 is to 2 trade on a higher time frame, 5 minutes or even 15 minutes. Yeah. So we go to Thursday, Wednesday, we go to Thursday. Thursday what market did? Look at Ali. Thursday midnight open with this. Sorry. So this was the midnight open, and look what market does. Swiftly goes up on Thursday because these were initial, not any of the, if we remove all the drawings. Okay, let's turn off the indicator. Yeah. So if we look at all these moves from Monday, let's say to Thursday. Okay, so this was not taken, went up directly. Okay, and we see Monday low was also not taken. So severe, I can say, liquidity generation was going on. And if we look at this area, okay, this gap, hourly, this fair value gap, which was not being purged, and on Thursday it purged. And if you can watch the time, that is the most important criteria, because there are two axes, right? This is the price axis and this is the time axis. So if we look at around 45 to 8, this is the macro opening time. So what happens? Market took this internal liquidity which was being made and breaks this structure to the downside with what? A fair value gap. So it's a clear movement to the downside. So if we go to 5 minutes, let's now get to 5 minutes because things will get more clear. Okay, so what do we see? Here is the fair value gap, but what people don't see, why do you think market didn't give an entry here? So here there is also a inverse fair value gap which is directly connected to this high. So if there is a, how can I say, there is a price point, well, like below which market is respecting. If you look at this level, okay, this high, this week, did market broke like from Wednesday, it went to Thursday. So this is an important point of inflection, and there is also inverse fair value gap, little short inverse fair value gap here, which retrace the markets to the downside. So this move came around 940. So if you have taken a trade, you should have entered, and this is also the that fair value gap, okay, which we are talking about. This was made, and why this fair value gap doesn't work, this or this on a 5 minutes, because these are breakaway gaps and breakaway gaps live unfilled. So if we shorted like here, and just 1:2. Top of the candle, it's been 1:5, man. But we should have taken here because there's a equal low and like 70% quantity here, and rest of the quantity you could have exited around this. This is the logical. No one can hold like this big of a trade. But on Thursday, another fair value gap was created. Okay, this the humongous one, and what market did, and I have been looking this recently that the a lot of people are trading ICT nowadays. So market is like literally doing, it is going down, but it is closing this fair value gap with generating a lot of what I can say downside liquidities, like here, sell side liquidities, might possibly say. So what it does, it closes that, then it creates this fair value gap, and the move starts around. See, 12:45. Every hour opening candle gives an entry. So let's get back to our weekly analysis. We have seen these trades on gold. You might have taken. I'm demo trading now, but this week I haven't taken much trades. Like this, I've taken 1 or 2 demo trades. That's it. And let's start our analysis. What are looking this week? So if we clearly see, market has retraced from this on a 4-hour level or a daily, on a daily level. This is the fair value gap. This is the sell side CB, which was created, and market respected that. And at an around C, consequent encroachment, right? It's a topic later we'll discuss, but if you know, this is consequent encroachment, this middle dotted line. So it went up there, then retraced. And if we look at this was from Monday, it went, then it rebalance this fair value gap, and then it retraced back to this BC. That's BC. So here is the CB and here is the BC on a daily level. Let's go to 4-hour. Let's look what market does. And if we look on a 4-hour, this is the fair value gap. Okay. Also, you can say this candle is a breaker, and it touches the breaker, went down. Then we look, let's remove it. If we look here, there is a new fair value gap which has been created. Okay, so if market respects this, then we can see lower prices, like there is equal low, not equal, relative equal lows, and here is also not taken smooth, so we should wait. And if this gets invalidated, then we can see market goes around this price level, around 320-ish. And on Monday there is, I guess, major news coming, like if you look at the charts, Monday there is no news actually. On Monday 19th there is news. FOMC minutes is on 19th also. Exiting home sales, it is also a red folder news, so we have to look into it. Let's move to other pair, like let's go to Euro. If you look at Euro on a daily time frame, or start weekly. Let's go to weekly. So in weekly, this is like seemingly it is ranging. Euro is kind of ranging between this. Okay, we take only body to body candles, is ranging between this. So on a daily, there is movement upwards this week, this previous week. So on a daily, what we can see that here there is a fair value gap with this daily inverse fair value gap, which makes it a balanced price range. And if you look at this, market touches, stays around this, then goes, because it is a important level. So if you look at daily, what we can see is this week from Monday was a kind of sideways day, Tuesday was bullish, Wednesday was seemingly bullish but not that, Thursday was greatly bullish, and there is a down close candle. So if you look at here, this fair value gap has created, but this is a small kind of a fair value gap also, and is less strong as compared to a great expansion. But if we look at this, great, it has overlapped. So if on Monday or until next week, probably, if you'll see market going, taking this fair value gap, then it's kind of ranging and breaking structure to the upwards, then you can go for a long setup, right? Targeting these highs. Stop loss should be below this low, this candle low. So this was for euro. Let's do some futures. Okay, let's go to ES. On daily, market on Friday closing, this is the Monday opening gap. Okay, now on market date was, this was the opening gap, this was the opening gap, and what market did was, took this liquidity and this, and then it went down. I don't trade futures a lot, but this week the structure was not as promising, because futures, like, we don't get entry into the markets at the right time. Maybe it's not giving that much of a fair value gap entries, because if it starts going, really bad, and it doesn't give so much entries. We look at New York session, we go to a New York opening, 9:30 opening, go to 9:30. So what we can see, market comes, takes around this, because this was a previous structural high, and this was we can say a rejection block also, because this was a order block created, the bearish order block, so price will reject from here. So it starts rejecting around 9:30. Then it takes these liquidities, these generated liquidities from Tuesday, took all these liquidities going to the upside, right? So if we look at this, was clearly sideways in the New York session. Go to another place. Here, what we can see is market breaks to the downside, creates a small fair value gap after 9:30 opening, and goes down. Okay. Then creates another fair value gap, respects it, goes more down. So, in a 4 hour, you can see market is respecting this fair value gap, and it has also created a fair value gap which is less. I'm less positive it will hold, because there is also a kind of sweep that market can make, but I'm not too sure, because this is a inversely fair value gap, and also this is a daily fair value gap, and if market breaks this, we can look for buys. So like if market breaks above this fair value gap and this, then we can look for more buys incoming. Let's go to Nasdaq. Don't look at gold, we have done it. Let's go to dollar. Let's watch dollar. So on a daily, if we look at this move and draw the Fibonacci, so is around is retracing around this 61.8 level, and if market sticks around this and goes upwards, because this high has already been broken, and it will act as a, you can say, a support. So if I'm clearly seeing dollar going up, taking like this, and there's a lot of liquidities to the upside for dollar. So like I feel it will go up. And so yeah, this was my weekly analysis. I know I haven't done excellent, but I'll try to do as much as I can and make you understand as much as I can. And also, yeah, little announcement, I will be regular on this channel, sharing my thoughts, my setups, my what I can say, psychology tips. Also, I'm a break-even trader, but I think I have found my edge, and it's like now I have to work on myself, and this is the best way where I can share with you guys what I'm doing in my trading. So more incoming. Most probably tomorrow I'll upload a weekly forecast, what we are looking for next week, how we'll see the market play, and from Monday, let's see if I can do a trade breakdowns every day. Yeah, so bye guys, this was it.